It's just connecting to the cloud. I'll just make sure that's going. Great, okay. Well, I'm going to bring this up. So everyone, my name's Philip. I live in Melbourne, but I now call Melbourne COVID County in light of our little fun time that we're all having. And who's having fun at the moment with COVID? Certainly a different lifestyle, isn't it? And for all of you that are homeschooling at the moment, my hat's off to you. My boys are 20 and 18, so I'm out the other end of doing all of that. But I've got friends and my partner as well. She's got a daughter who's 13, so it's okay for them, but the 10-year-old's quite difficult. So we're going to be talking about investing during COVID, and it's a very interesting time. And what you're going to learn about tonight in the time that we're together is just what's actually going on. So I'm going to talk about some of the research, some of the trends. I'm going to give you some tips on where I think there are some wonderful opportunities. And when I say that, I mean that quite genuinely. I've never been busier in my business. A lot of real estate agents are very hamstrung because their businesses are very much metropolitan focused. And unfortunately, I feel for those people at the moment because they're in a holding pattern. They can't do business. We're in a fortunate position, which I'll explain. So I'm going to talk about what to invest in. I'm going to talk about the challenges during lockdown. And I'm going to also share with you what I think are some really creative ways to invest, opportunities right now, and there are plenty, and investing beyond COVID. So who's hosting tonight on behalf of Suvan and the Accelerate team? So my name is Philip Robison. I was a broker, believe it or not. I was a mortgage broker for some 18 years. I loved a lot of it, but I also felt that there were things that I really wanted to do, and my passion was property. And I chose to become a regional buyer's property expert. I only buy property in regional Australia. I'm a cancer survivor. I had prostate cancer 6 years ago at the age of 47. I'm a health advocate, and I'm building a global foundation. You'll probably all start hearing more about it, and that's called Saving Brothers. And in fact, one of my passions is the subcontinent. I'm partnering with different people around the world, and I'm very keen to help increase health awareness and men's physical and mental health in India. And I've got some men, and if anyone's interested in being involved in that project, in the meantime, please reach out. I've got a private Facebook group just for men at the moment called Saving Brothers, and that's about supporting men. We've certainly got some of our Indian brothers in there, and one of my passions is to really help men around health. I'm the father, I mentioned, of two sons. Josh is 20 and Ben is 18. My youngest is in a sticky time because he's in year 12, so fairly challenging time for him. So my key learnings of being in the finance and property space for some 20 years, there are three things that I will not shut up about. And the first one is I want to alert you to, I fight the war against media misinformation. And what do I mean by that? Well, the mainstream media constantly are all about clickbait. They're all about headlines. They want you to click on an article. It's sensationalist. And it wouldn't be that long ago that you may well have heard that they said, oh, the property market's going to drop by up to 30%. Now that was taken completely out of context. It was a grab from an article where a quote was made, but the quote really was that, what was said was, well, if things continue this way for the next couple of years, that could be as bad as it gets, but we think it might drop by up to 10%. And one of the things is the mainstream media really are not too good when it comes to reporting. And unfortunately, a lot of people, if you think about it, the journalists from the mainstream media platforms, we'll call Herald Sun, The Age, The Australian, Fin Review, are all based in Sydney and Melbourne. And the issue with that is that their reporting is Sydney and Melbourne focused, or Sydney and Melbourne centric. And they talk about the property market. But Australia is actually made up of thousands of property markets. So what might be happening in Point Cook, for example, may not be what's happening in Cranbourne or Ballarat, Bendigo, Sydney, Wollongong, Perth, lots of different markets. I'm going to share with you that I really feel, and I know, in fact, because I do this myself for my own family, is that regional property investing absolutely ticks all of the boxes. And tonight I'm going to explain over the next 40 minutes, what are those boxes? Now, no matter what you do in anything in life, research is critical, whether it's looking for the right life partner, you've got to research. You've got to make sure that person ticks your boxes with values. It's no different with property. Everything that I do for my clients is heavily based on research. And so in saying that, what I look at is what's actually been happening with COVID. What's COVID been teaching us? Now, 88% of organisations have adopted from working from home since the pandemic. And 70% of remote workers were actually equally or more productive than previously. And I think what's happened is people aren't stuck in traffic. You've only got to go down to Geelong and you see that traffic bank back past Point Cook. I mean, to have to do that every day is certainly going to affect your mindset, your mental health over time. People are being able to spend more time with families. I know people are out walking in the mornings. They're taking better care of themselves. They're having more regular breaks during the day. And I think that we've learned to adapt and adopt this new way of working. What's also happened with COVID is that we've realised that people now have now got to a point where they've actually got a lower risk appetite because of uncertainty around employment. People actually want to have a smaller mortgage. And some people we've seen, and in fact, if you're aware of, if you watch the Channel 9 news at all, about 2 weeks ago, Bernard Salt is renowned as Australia's best demographer. And he talked about the exodus to regional Australia. So a lot of people are actually saying, well, I don't want the big house anymore or the big priced house. I'm happy to trade in to go to a lower priced property in regional Australia. Because people are actually commuting or they're realising maybe they only needed to come to the city for work. And because employers are saying, well, you're actually able to work from home quite successfully, maybe you don't need to come in. We're seeing at the moment first home buyer incentives. Suvit, you would have seen this in the loan applications that you've got, that never before have the government thrown more money at people, including the government guarantee, where you don't pay lenders in mortgage insurance, which they brought in on the 1st of January. So you can borrow up to 95% with no LMI, lenders mortgage insurance. We've never seen that before. We've got record low interest rates. People are seeing that moving to regional areas affords them a better lifestyle, and they've obviously got more space and flexibility. Now, I mean, we only have to look at the estates around Melbourne. The block sizes are getting smaller and smaller. It's not uncommon now to see a block size of 350 square metres. Other things that COVID has taught us is 52 odd thousand. This is not a unique phenomenon. This has been going on for about 3 years. Some 52,000 people have already migrated from capital cities to regional areas. And in fact, 27% of more people are actually escaping Melbourne's COVID-19 hotspots for what we call either a sea change or a regional change. Another thing that was interesting was that the rents. Now, I will say this has probably to some extent been influenced by properties coming back on the market. I'm just admitting more people into the call. Properties that were previously, say, out on Airbnb are now being brought back into the rental market. So that's also, we've got an excess of supply, whereas actually in regional Australia, regional rents have increased by 0.2% on the average. A lot of the areas that I work in, it would be more than that. And I've never seen it like this ever, but the lack of supply of properties in regional Australia for rent and purchase is unprecedented. So that takes away one of the big fears for people is, would I get a tenant if I bought regionally? Absolutely you would. First home buyers, interestingly, 82% are saying that they are hoping beyond COVID that they'll be able to find a bargain, and actually half plan to buy a house in the next year. And interestingly, 60% said they'd consider a regional area because that could potentially save them money and give them a better lifestyle. So what I wanted to share with you is a concept that I coined, the holy grail of property investing. And that is in relation to properties that are particularly affordable. I mean, if you look at metropolitan Melbourne, you're really not going to get anything. Suvit, you'd see contracts all day, every day. You're not going to get a lot of AU under $400,000. You might get a one-bedroom apartment in the city.
Yep.
So the beautiful thing about regional Australia is you can quite adequately, and I'll give you examples tonight, of buying houses, and I'm not talking about dog boxes, I'm talking about 3 or 4 bedroom homes, anywhere from on average $150,000 to $250,000. And part of the holy grail I call about rental returns. I talk about rental returns. When I buy property for my clients across Australia, we only look at properties with rental returns starting, I say starting from 6%. We only look at areas with low vacancy rates. Typically, we buy in areas with a vacancy rate of about 1% to 2%, and we only, again, look at economies that are strong and diverse. And there are plenty of those in regional Australia. And so what I thought, and Suvit, I'm going to ask you to get your calculator ready because I know you're an excellent broker. I'm going to ask you this question. This is a working example of a property that if you bought a property, say, in regional Australia, but let's call it regional Vic, because we're all predominantly, I would imagine, in Victoria. If you bought it for $260,000 and your government charges, and I'm referring to stamp duty, for example, your total purchase costs, say around $277,000. Suvit, if you were to borrow 90% on $234,000 P&I over 30 years, I would imagine your repayments, what are you looking at? I would have thought it's probably going to be something like maybe what, $940-ish or something like that?
Around $920, $930, yeah.
$930, okay, well, that's even better than I thought. I said $940, you're even better than I thought. Well done. So basically, what I've done, I did my maths here on 3%. So in this example, the shortfall to settle. So in other words, you bought a house for $260, you added your stamp duty, it now costs you $277. The difference between the loan that Suvit gets you at 90%, which was $234 and $277, is what we call the shortfall. You'd have to find $43,000. Now the loan repayments on that $234, I said were about $1,000. Suvit's just said $920 to $930. Let's be more conservative and say it's $940 a month. I've allowed for utilities, ongoing rates and maintenance about $250 a month, which is a reasonable amount of money. So I've said in this example, I allowed $1,250 a month in outgoings. In this example, my rent was $340 a week, less property management, which gave us a net cash figure of about $1,360. Now, therefore, we had a cash surplus, extra money coming in per month of about $110. I reckon my numbers said about $170. Your numbers, Suvit, are saying maybe $180, $190 a month cash surplus. Now, what the awesome part about that is you can take that extra money and de-risk the asset. What do I mean by de-risk the asset? It means that you can pay extra into your loan and pay your loan down faster. So you're building equity faster, constantly de-risking. Most people go with negative gearing, which I used to talk about as well, but I much prefer this strategy because you're constantly de-risking the asset, and that's important. And so for me, why I think regional ticks all the boxes is because A, it's affordable, it's a low cost of entry. You can end up for say 500,000, maybe buying two in two different areas, for example. So you're spreading your risk, you're hedging your bets, so to speak. You've got high yields. Remember I said in that previous slide, 2 slides back, that I only look at properties with a yield of at least minimum 6%. We've actually got faster growth. And some of you might find this quite bizarre because the mainstream media don't talk about it. So in Victoria in the last 5 years, Ballarat and Geelong have had faster capital growth than Melbourne. In Sydney, Newcastle, Wollongong and Orange have had faster capital growth than Sydney. Another fact is that in the last 12 months, when most of the metropolitan Melbourne market was actually dropping or plateauing the values, in fact, 61 regional towns across Victoria had capital growth greater than 10%. Now, I like always to share.
Well, some toilets here.
Oh, good, Brett. We might have to mute you, my friend. So, Latrobe Valley. Now, this is an interesting area because you see, a lot of people thought, and this is what the media, if I go back what I said earlier, the war on media misinformation, all they like to do is preach doom and gloom. You only have to turn the TV on tonight and you'll hear how bad things are with COVID, that everything's a disaster. And so that's what they prey on. It's either boom or bust. When they talked about the decommissioning of the Hazelwood power plant, for example, they said, oh, it's going to be a disaster. It's the same like what happened in Geelong. Oh my God, when Ford goes and Alcoa go, it's going to be a disaster. And those blue collar, or what we call smokestack economies, it's actually been the opposite. Now, I'm not a great fan of this government, I will tell you that right now, but I will say there are some things they have done quite well. Geelong, they actually helped create a lot of industry down there. Same here in the Latrobe Valley. In fact, the decommissioning of the Hazelwood power station is going to create work for about they've said 5 years. And in fact, they've actually created another 1,000 odd jobs. So 3 of Victoria's most affordable regional towns are in the Latrobe Valley. There's a very large program down at Traralgon. They're doing phase 2 of the regional hospital expansion. It's another $217 million worth of upgrade. They finished stage 1. And what's happening down in the valley is demand for property is outstripping supply. Now, you've only got to look at what's happened in Cranbourne and in the western suburbs, Point Cook, and all around that catchment. When demand outstrips supply, prices rise. And it's no different in the Latrobe Valley. There's plenty of jobs in aged care, health services, call centres, food production. In fact, ASIC has an office down there in Traralgon. At Sale, there's a Defence Force pilot base, and there's going to be an underwater sea cable from the valley across to Tasmania. And they've also upgraded a number of sections of the railway links as well. Albury-Wodonga is one of my favourites, a very diverse economy. ASIC is there. They've got 3 Defence Force bases. They've got hospitals, cancer centre in Wodonga. They've got great infrastructure, agriculture, viticulture, and prices are great. And we've been doing a fair bit of buying there over the last few weeks. Now, here's one of the big challenges with COVID. Lockdown number 2, friends. Okay, what we found was that we were going from lots of competition to very little amounts of competition. We also found with lockdown that many of our city-based agents or compatriots, they just aren't working because they can't work. The government's told them you can't. Can't do open for inspections unless you can do something online. Basically, the industry's in a holding pattern. So the question is, well, then how do you buy property when you're stuck within a 5-kilometre radius? So here's some thoughts. Well, you could do a virtual inspection, obviously online only. Marketing's designed to get you to buy. It's only ever going to show you the good parts. They're never going to... And isn't it funny? Always when you look online, don't those houses or rooms look better than they are or bigger than they are? They're not neutral. They're already motivated. The deal is stacked, so to speak. It doesn't show you the full picture, the neighbourhood, the suburb, the street. And I'll give you an example. I went and looked at a house in Echuca in December. On the internet, it looked great. And then I got up there and I turned around and I looked in the street, and across the road was a massive water treatment plant. And so my point is, you've got to be careful. You've got to have someone walking the dirt. Another time I bought in Armstrong Creek. I was down there inspecting and I saw a block of land. It was amazingly cheap. I thought, wow, I've got to look at this land. So I went down to Armstrong Creek and I understood why the land was so cheap, because there were massive power lines directly over the block. And I don't know about you, but I wouldn't be that excited to buy an investment property with massive power lines, let alone live in it. So what can you do? What should you do? You need local property assessors and buyer's agents, people who are on the ground there, able to help. And that's what you need people, because in terms of the rules at the moment, it's very difficult unless you've got people on the ground. You need someone that's independent and neutral. In other words, a bit like what Henry Ford once said when he was asked, when he released the Model T Ford, oh, what colours does it come in? And he said, well, you can have any colour you want as long as it's black. In other words, when you're dealing with a sales agent, remember, they are working for the vendor. Their goal is to make you pay the most amount of money that they can get out of your wallet. Private inspections, you need to have someone inspecting a property on your behalf. Provide photos, video, reports, local market research, negotiation on your behalf. These are really, really important things to do. And it's something that's what my team does, which I'm happy to explain. For example, I'm about to release a video and I talk about John West. And who remembers all those ads where on TV, it's quite catchy where they talk about these are the fish that John West rejects. And I said to one of my guys who works with me for my team, he's a building and property expert. That's his business, what he does. And he's also like a carpenter, a chippy. And his name's Jason. He works with my team. And last week he looked at 6 properties for me. And the first 4, he went, no. And he felt bad. And I said, mate, that's fantastic. And he said, well, what do you mean? And I said, mate, you are being the eyes for our clients. They don't know necessarily what to be looking for. They're not aware that just because it looked really pretty on the internet and you got there and you realised that the house would need re-stumping, he said, mate, the walls are probably going to crack in 12 months' time and they're going to have to throw a fair bit of money at it. That's the value of having someone who can be on the ground. You need to understand property and whether it needs a new fuse box. Is there water leakage somewhere? Is that likely to lead to a bigger problem? And one of the things I love about having my team is I'm not the property expert. I run a business and I'm a great buyer's advocate, but I get expertise around me of people that can actually assess a property from a construction perspective. Really important. So really, what's going on right now and why I think there are huge opportunities is because most people are following the herd. They're sitting back. They don't want to do anything. Oh my God, I shouldn't do anything. And I will quote Warren Buffett. We've all heard of Warren Buffett, surely. What does he do? When everybody is selling, he's buying. When everybody's buying, he's not selling, he's just sitting. So property is important that you take a long game approach. So right now, there is so much opportunity in the marketplace, particularly regional, because most people will just wait for someone to tell them it's time to buy. Most people will do nothing. And that for us has been our opportunity. I've got certain clients. I've got one client who's given me a brief to buy in 40 properties, 40. Now he's got a lot of money, but he's a smart man because he's realized that there are really great opportunities. So we are running around like a Pac-Man, as in chump, 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 looking for opportunities because we've got less competition. So the other thing is homeowners are stuck in the city. They can't do anything. And those vendors that are coming out and saying we want to sell, they're more likely to meet the market. So for me, lockdown has presented a great time to negotiate. I think people like to get case studies. So I thought I'd throw this one in for you. So this is a house that I bought for a client of mine. A few weeks ago, I personally inspected this house. In fact, I at the very last minute before lockdown, when the New South Wales border got closed, I drove up that afternoon. You had to get into New South Wales before the border shut. So at the last minute, I thought, no, I love it. There's too much opportunity right now. I've got to get up there. So I drove the 4 hours to Albury. I didn't have accommodation. I had to go to a few places. I finally found one. I looked at this house. I didn't buy it straight away. I actually waited several weeks and I just watched it. And then it ticked some boxes for us. And in fact, the owner's from Melbourne, works in the hospital system. So the list price was $269. About 3 or 4 weeks later, I bought it for $254. Rental income, $310 a week, gives us a gross return at 6.3% in a nice little court, nice quiet area. 200 metres away are the local shops. Another case study is a property that is mine, in fact, is one that I bought for me. And I always think, well, if you're going to talk about these things, Phil, you've got to practice what you preach. So I'm quite happy to share with you one that I bought in February. And this property here is in Shepparton. And I like Shepparton because it ticks a lot of our boxes for what we like and our fundamentals. I spent $12,886 on a cosmetic renovation. Cosmetic and I'll show you some photos in a minute. So my total investment with other things, I got an independent valuation, a building and pest inspection, and my rent was actually to a doctor because this property is very close to the hospital. Quite strategic, I bought it. After my reno, my rent is now $340 a week. So my gross return after all my expenses is 6.4%. So I just thought, look, I'm going to frighten you with some photos. These were the beautiful curtains when I bought the house. And this was this beautiful looking split system. The walls, it's very dry in Shepparton. So you can see the roof had cracks there. The soil was really, really dry. Plants were pretty much dead. You'll see it's a very basic house. But here's the thing. The house has good real estate bones. So it's always important to get a house with good real estate bones. This was a pretty ugly looking gas heater. Costs a lot to run too. More cracks in walls. And this one, believe it or not, was actually meant to be a feature wall. Certainly is a feature, that's for sure. And again, the front garden, the soil really, and you can imagine, not very appealing to a tenant. So with that $12,886, looks a lot lighter. I painted it off-white, not me personally, my team. That's where that gas heater was. Floorboards look great. Nice hallway, nice and airy. Bathroom, nice and neat. Next door to a park and the hospital, the Goulburn Valley Hospital, about 600 metres away. I put in new curtains and sheer for some privacy. Put in a new Toshiba split system. And I had the soil removed. We changed the soil and we put immature succulents in. Why succulents? Low maintenance, don't require the tenant to do much in the way of watering. They just look neat. So that was in February. They obviously have grown a bit since then, of course. And I've got tenants that are house proud. In fact, they pay every 3 weeks to have my gardener come and mow the lawn at their cost. And that's fantastic. We made the house very welcoming. And that was what it was like back in Feb. So my predictions post-lockdown. What's going to happen? It's a bit like, I reckon, what's going to happen with restaurants. People are going to flock back. People are going to flock to get out. And what's going to happen is you're going to have very busy, socially distanced inspections. You'll have more and more people wanting to move to regionals for that affordable lifestyle. You're going to have more competition for less stock. And I would have to say one of the greatest competitors that I deal with at the moment are first home buyers. They have, because as Suva would tell you, they've got so much incentives from the government. They are just out and about going crazy. So it's really quite interesting what they're doing. And long term, I think what's going to happen when COVID ends is you're going to have people will continue to work remotely. You're going to find more people comfortable to buy more affordable property, particularly in relation to changes maybe in their income or their work certainty. You'll find that there's much more emphasis. People are now much more conscious. I think the world's has taken a bit of a breath, a deep breath, and realised, you know what? I don't know if I was really that happy before being on the life treadmill. So we've actually, what I think is quite pleasant where I live, I'm seeing people in the parks a lot. People are getting out. Families are spending more time. So I think there's been a lot of good things with COVID as well. So much more emphasis on work and lifestyle balance. I think you'll find that more and more of these gov hubs, like in Ballarat, Morwell and other areas where government departments will continue to divest and relocate their offices to regional centres to support that growth. And you're just going to see a greater demand. I mean, my biggest challenge is not buyers. My biggest challenge right now is actually getting stock. There is just so much competition for the limited amount of stock out there at the moment. And I'll come to the final slide in a moment. I'll close that off because that was the second last slide. But Suvit, I'd be more than happy now to open it up to your clients, your friends, your customers around any questions that they would like to ask me.
Hey, Phil, Arthur here.
Yeah, go for it.
Hey, mate.
Let me
I can't remember the number of the slide that you had, but it was about buying, why buying in COVID. And I was just wondering, I was just wondering if, is it related to COVID-19? Because it seems like the variables you're listing are more about the infrastructure in that area anyway. So I was just curious to know if there's anything COVID specific about why we're looking at Albury area and the Latrobe Valley.
Yeah, I really love that question, by the way, Arthur. So the thing for me is I'm all about fundamentals. So I've got a really great mentor that works with my company. And has anyone heard of Terry Ryder, R-Y-D-E-R? Terry Ryder runs a company, if you want to look it up, called hotspotting.com.au. Terry is one of Australia's most respected and highest regarded, Arthur, researchers. He also writes for Property Observer, which is a website around property. Terry is the mentor to my company and to me personally. So what we've been doing is we track the market. His company tracked the performance of every suburb in Australia. I run a podcast, Arthur, which is called the Philip Robison Property Podcast, funny enough. And if you look at my website on the bottom of all the slides there, Philip Robison, or you go to, whether you listen on Apple or Apple Podcasts, Spotify, Google, whatever it might well be, my podcast, we constantly talk about different areas that we think are COVID friendly. And Albury is definitely one of those. So what my emphasis or my point is that, yes, we are going through historical change, but there are markets that have become, if you like, COVID proof because they tick certain boxes. And for us, infrastructure, hospitals, social services, Albury-Wodonga is one of those areas that we're very, very bullish about. In fact, I spoke to an agent the other day, Arthur. He's been an agent for over 30 years. He said, I normally run listings of about 30 properties at any one, 20 at any one time. He said, I've got 3. And everywhere I talk to people in New South Wales, across Victoria, agents are all saying the same thing. We've got very little listings and everything we list gets snapped up very quickly. So that's also putting upward pressure on prices. And we've got very little listings for rentals. Whatever gets listed gets snapped up and rented very quickly. So we just think that there are areas that are being supported by COVID.
Thanks, Phil.
I hope that answers your question. If there's more that you want me to go into any further detail, just ask. Like I'm here to help.
Yeah, I think the takeaway then is that actually you're looking at what's COVID safe then.
Yeah, that's right. And that's a really good way, COVID safe, Arthur. We're about mitigating risks. So when you look at property, you look at economies, you've got to look at what's happening. See, it's not what's happening at the federal level. It's about what's happening in the local economies. I'll give you one example. Now, Benalla near Shepparton. Benalla is, I don't know if you were aware that the concrete for the Westgate Tunnel is coming from Benalla. So what would I then necessarily recommend Benalla as a good investment? No. Why? Because what happens when that project finishes? Are there other industries that are going to drive demand and force prices to increase? And I would have a question mark. So I'm not saying it's not a good place. I would say there'd be many other places ahead of Benalla, by way of example. Portland, believe it or not, in Western Victoria is a great one. 9% capital growth last 12 months, very diversified industries and economy. Rental yields have increased by 11% in the last 12 months. But you don't hear about that. So again, the key thing is research. And if you enjoy listening to podcasts, Terry Ryder is my most regular guest on my podcast, and you'll get a lot of great information, a lot of good insights by listening to the podcast. Who else wants to ask a question?
Hey, Philip, Rahul this side, how are you?
Hi, Raoul. Nice to see you. Well, I can't, but I like the big R.
I got two questions actually. The first one, do you only deal in regional Victoria and New South Wales, or is it all over Australia?
All over Australia, my team is, because what I do, I engage with local people. The beautiful thing working with Terry is his research is Australia-wide, Raoul. And one of the things we do is we look at impacts of, for example, land tax. Because sometimes people might be buying in Victoria for a while, and if they continue to buy, for example, in Victoria, they're going to run into a land tax problem, Raoul. So we look Australia-wide.
All right. Okay. So my second question will be, you know, the property, one of the examples you showed for your property was that you had to spend $12,800 some dollars to fix it. So let's, for query's sake, you know, you're buying a property, like I'm buying, or one of my clients is buying a property, and they, so this figure, I know you can't be exact, but before you buy, you will give them an approximate estimate that you need to still spend approximately, you know, under 15 grand to fix these options before you know, making an offer.
Yeah, I love your question, Raoul. So I'll give you some real examples of some of the properties I've been looking at recently. I bought a property in Albury for a client. It was advertised price $225. We've bought it for $217. And what we did is one of my guys has gone through the property, and we've looked at what we believe it's going to cost. There is some asbestos in that bathroom. So we've got a quote of between $8,000 to $12,000 to redo the bathroom. So what we do, even before we make an offer on a property, we've got an idea of what money we need to spend. So we do a building and pest inspection. But if even before that, we would get an idea of what we think we'd need to spend. We then say, okay, well, if we're going to, in this case, that property we ended up buying for $217. We allowed $15,000, Raoul, to renovate it. So therefore the property owes us $232,000. Now to work out that return, so we believe after speaking to the agent, it'll get a rental. It's rented at $285. It'll go to $310. So to work that out, just so you know the return, $310 by 52 weeks divided by 232,000 gives us a 6.9% rental return. So before we buy, we assess it. Now, the other thing we liked about that property that we bought, it's on 803 square meters, and it's a nice enough deep block. We're going to be able to build a second property behind it. So we look at what the cost of it is going to be. We bought another one. Another thing we do, I just bought a house in Shepparton, actually. That one was not on the market. The vendor wanted between 209 to 219, but one of the agents I know rang me and said, look, this is what he wants to do. It's again next door to a park. We ended up buying it for 210. The owner's going to stay on for a while until he finds an acreage property, because he wants to raise his boys with motorbikes and horses. So he wants some land. He's going to stay on. We're going to rent it at 285, and we're going to get a 7.1% return. But we always give my client an estimate of what, before we've even put in an offer roll, what money do we think we need to spend now or later? And then we work out what the return is going to be, and does it make sense? We have a formula. If it doesn't have a rental return over 6%, we don't buy it.
Okay. Sorry, I have another question.
Go for it.
My first question was related that you can buy anywhere in Australia, like you promote that. Yeah. Correct. So if I can't travel to Perth, so you will give me because then I won't know whether there is any electrical cable running through the house or on top of the house. Is it safe? So this is what you will do, or your team will do, which will be based in Western Australia or wherever.
Yeah. So typically we would have one of our guys. So I'll give you an example. Tomorrow, one of my guys is driving actually to Shepparton. We bought a house in a town next to Shepparton, Marupna. So he's going to do a pest and building inspection for that. And he's also inspecting 2 other properties for us. He's allowed to go because he's a licensed pest and building inspector. So if we were looking at the Perth example, we would have someone go through it, minimum qualification of a chippy or a carpenter, or someone that's a licensed building and pest inspector that we would engage to on our behalf to assess that property, and we would pay them to go and look at it.
Okay, cool.
So the beauty is, whether it's buying in Townsville, Dubbo, New South Wales, Port Pirie in South Australia, Mandurah in Perth, we will find the people to be able to provide us the reports.
Okay, all right, cool.
Thanks for the questions. I love them.
Thank you.
Oh, no, you're welcome. Any other
Hi,
questions?
hi, Philip. My name is Leslie Thomas.
How are you?
Yeah, not too bad, man. I have two questions. One is, we still don't know what do you charge for your services? That is the first question I have.
Good question.
What percentage, right? And the second question is, if we select a property, do you kind of deal in that, like in terms of kind of working out whether it's the best buy in terms of investment? So for example, let's say if I kind of like one of the defense housing property in Wodonga,
Yeah.
Will that something be part of your service, just to kind of provide that advice whether it's a good investment, or is it more about we come to you with a budget and say, hey, can you kind of look at property for us in this particular suburb?
Yeah. So the way I'd answer that is I take a long game approach. So I do a brief with my client. My team allow 32 hours in our package for clients. So we actually take you through. In fact, Suva, do you want me to show them what I do?
Yeah, please go ahead.
I think so. I think it's important because I'm just going to grab this. I'll get rid of this document. I'll come back to that document. Just let me bring this other one up. So let me answer the first question about a Defence Force house. I mean, it wouldn't be something that I would be looking at doing purely because I don't necessarily think it ticks the boxes for what we do, our formula. But I mean, I'll look at all sorts of things. And so I'm not saying no, but it probably does just sit outside of what we would typically look at. I'm just going to bring up, I just want to find a particular document. So package. Okay. Just opening a new document. Everything's a bit slow because I've gone from Dropbox to OneDrive, and things have to be pulled out of the cloud, and I'm finding it takes a little bit longer, particularly when you're sharing your screen. So hopefully this won't be too long. Look, the way I operate my business is a flat fee for service.
Okay.
As opposed, I'm just going to bring this across, go on to another screen. Okay, I'll just get rid of the other document. How this works. So I call this package here, I'll just move that out of the way. So this is the results package. So it's all a flat fee for service. So I look at understanding, it'd be no different with you, Suva, when you're talking to a customer and you got to do your fact find. It's what I do as well. So I take a long game approach. So even with me, I'm not about selling property. I mean, my personal thing is I buy property to hold so that I've got income for retirement, and I hold them in a trust. And I'm not giving advice, by the way. Everyone's situation is different. But my intention is to have income for retirement and then keep them, not trigger a capital gains event, and keep them for my sons. So one of the first things we do is we look at what your strategy is. What's your goal? Do we understand what the end goal is? Not that I want to just buy a property. Okay, but why don't we look at your retirement? Are we looking to buy one property over the next year, 10 over the next 20? What's that look like? I want to trigger you to think about those things. Are you looking to hold it for future generations? Is this going to be your first property purchase? Are you looking to acquire multiple properties? So there's a lot of time we spend on looking at all that because we need a target. It's not just about what I call shiny object syndrome. A lot of property investors they're all over the place because a friend said, oh, I should do this. And then they listen there. And then someone else says, I should do that. Or the media tells them, you need to understand what your goal is. Warren Buffett's the perfect example. He just has a strategy and he sticks to it. and we're the same. So we need to understand also what your budget is. So what are you comfortable investing? What are we prepared to pay for a property? Do we have a budget in mind? What's the best use of that property? That one I bought in Albury for my client, again, are we looking at a property that could be subdivided? So one of the things I will say when I'm looking at properties, if we're looking for that, I'll get my town planners involved even before we've made an offer. Now, we looked at a property, the last couple of properties didn't stack up because we felt after our research and our town planners, at no cost to my clients, mind you, I'm just leveraging my relationships with people, contacted the local councils. When we ran our numbers, we decided not to make offers for those properties. So again, you know, is there a settlement deadline? Is it about a tax issue? Like, do we need to buy, for example, you know, before a 30 June deadline? So sometimes that might be the case. So we're really very much about understanding what our goals and objectives are, and remembering that it's really important that we got to look at what's happening in local economy. So through Terry's company, Hotspotting, we're tracking local markets. We're looking at where to buy. Not only where to buy, but what are the streets to buy in and what are the streets not to buy in. You don't want to be buying in a street knowing that there's burned out cars at the end of the street. So this is the thing. Sometimes people go, look, I bought it off the internet. Yeah, but if you don't know what's around, are there people shooting up drugs down the end of the street? I'm not saying there are. Just need to be aware of the local infrastructure. So we do a lot of workshopping with our clients. We obviously leverage contacts. I mean, even today, I'm looking at a property tomorrow. Again, it's not listed. It's been beautifully renovated. My guy's going to look at it tomorrow and he'll tell me if that's the case. I've already got one of my clients prepped, ready to go. The property's not on the market yet. Leveraging your contacts is, I'm about looking after agents. If you're kind to them, if you give them business, if you show them respect, they're just people as well. And when you can have those sort of relationships, that's really, really important, because then they're going to say, Phil's a nice guy to deal with. And if I'm not, and I'm not about doing the wrong thing, I'm not there to, pardon the, you know, really screw them down. I'm there to make the deal work for everybody. So that's where it's great that we can get there first. Not always, but in many cases. And obviously with my team, it's really important that we personally inspect the properties. So we really carefully, like my guys send me photos. They say, mate, I wouldn't buy there, or mate, that bathroom, it needs a bit of work. The tiles are lifting. There's a water issue. Maybe we need to replace the fuse box. It's a damp garden. That might be a problem. What's going on? So we're really careful. Is there splits in the plaster? What's going on with the roof tiles? Really important from getting that feedback before we make offers. Divide and conquer. Well, I've already talked about subdivisions. And then we present offers to our clients on the properties that we think are worth going after, and obviously we negotiate. Now, that fee is a flat fee, $79.50 plus GST. And in this document, I map out, there you go, 37 hours we allow. I'm not saying we spend that, but that's the amount of time myself and my team allocate. In addition, now if we're renovating a property, one of the good things I've partnered with my guys in terms of doing the work with local trades, if we're going to renovate a property for a client, I've got in my team, one of the guys who's a client of mine, I now have a deal with him where we leverage his buying power. He does hundreds of properties a year for real estate agents. So they tidy them up, renovate them either for sale or to get a better rental yield across Australia. And because he's a client of mine, we now leverage his buying power. So rather than go just to a local tradie who walks into Bunnings and whatever price they give him and he adds 10 or 20% and that's what you pay, because my guys buy in volume, we get those volume discounts, which is great. So we can manage, if someone wants us to manage and project manage, and I pay my guys, I call it the concierge package. So it's $79.50 plus $2,200, and that increases the value. Even before we've gone down that path, we've already though got an indication of what we think it's going to cost to do that extra work, and then what we think the return will be. And then we can cherry pick whether we'll do certain things now or whether we leave them. but we will manage that renovation, and then obviously get the works done, oversee the works, and then help get a rental agent and assist them with that rental agent to get tenants. And again, all these things are part of what I call a concierge package. So it's a whole end-to-end solution. It's a done for you, but it's a fix. It's not on a percentage, and we allow approximately 18 hours on top for that one as well. So again, that's an Australia-wide service that we've been able to provide, and our clients pay 50% up front and then 50% when they execute a contract to buy a property.
Thank you,
I
Philip.
hope that answered your question.
Yeah, it did. Thank you.
You're welcome. No problem. Now, so are there
Hi, Philip.
any other questions?
Yeah, hi, Philip. The cost you showed, is it per property or
Yeah.
is it some bulk package?
No, that's per property, because we've got to do the work. It's not like we're just going and buying t-shirts, because I've still got to send my team. I've still got to assess every property. We've still got to do every, if we're renovating, obviously the costs are different per property. Now, if somebody says, you know, we start buying multiple properties, of course, I'm prepared to offer us, you know, a smaller discount, or some sort of a discount because of loyalty and someone's coming back. And that would certainly be, I'd be open to talk about that.
Philip, I've got a question.
And other thing is I think in your strategy, it is all the older properties. Like being an investor, we have always come to know that for an investment property, you should go for a new property, considering that the tax cuts and depreciations you can get in that. And being a new or fairly new property, the maintenance costs would be less. And in an older property, there might be more maintenance costs down the line. So what's your point on that? And do you include those as well, new properties or fairly new?
Yeah, I think that's a great question, and I'll answer it this way. So most new properties more than likely are going to be in an estate. The second part of answering that question is that most new properties are going to be more expensive, and therefore the rental yield is going, so that you're not going to get a new property in the range of 150 to 250,000. It's just not going to happen. Now, if I take my property, I bought it for 257,500. I've spent 12,886. Do I get the depreciation of a new dwelling of $13,000 or $14,000 a year for the first 5 years? No. Do I get some depreciation? Potentially up to a couple of $1,000s a year? Yes. So it's also about what your strategy is. Not knowing what your strategy is, there are benefits in buying new, but I think there's also benefits in buying. Again, that's part of why you get a good building and pest inspection. And we buy always subject to a pest and building inspection. Now, some of these properties, we just bought a property in Northern Victoria last week. And as my guy said, Phil, it actually hasn't moved. Like there's no movement. He said it's a 40-year-old property. And if it hasn't moved now in 40 years, it ain't going to move. So just because it's new doesn't always mean that it's better. It's just going to cost you more. You just got to understand what your goal is. So a lot of people have been buying new because that's what they've been educated to do. And there's nothing wrong with that. I'm just espousing a strategy that says you don't actually have to spend as much money and you can get a lot of advantage. So what you might have paid for something new, you might be able to get 2 regional properties and potentially going to give you a higher rental yield and potentially a better capital growth.
Philip, this is Nitin. How are you?
Excellent.
I just had a question. You have been talking about only residential properties. What are your views about commercial properties in regional areas? Because what I have seen is that you get a lot of rents is paid by, of course, the tenant, but all the other utilities and bills are paid by tenant as well. So you are paying less in there compared to a residential property where you are paying few of the other rates as well.
Yep. Okay, great question. So I do not deal in commercial property. So I'm not an expert in the commercial space, and it would be wrong for me to give advice to say, yes, I think it's a good buy or it's not a good buy. I think Traditionally, whether it's commercial in cities or in regional, capital growth is slower. Traditionally, yields are higher. Again, I think it's going to come back to what your strategy is. But for me, I've picked this area. It's what I'm doing personally. I know it works. My mentor has been buying properties in regional for 20 years and has got over 30 properties. So I figure I've got some good people around me. Terry Ryder, who's one of Australia's most respected researchers, absolutely loves regional Australia. If you listen to my podcasts, you'll certainly learn that. So commercial for the right reasons can absolutely work. Do I know a lot about it in regional Australia? No, I don't.
Can I get one more if no one else?
Go for it, Arthur.
Hey, Phil, just would love to get your view on as the market reaction to COVID. So meaning, when do you have a view on when we might start to see a significant and sustained decline in housing prices, metro versus rural, regional, and when also could we expect to see the bottom?
Yeah, I mean that's a Nostradamus question, isn't it? So I think right now, regional, because there's a lack of supply and those economies are typically more robust. They're not as sexy. They don't go up as fast. What you find is metropolitan areas tend to be a bit more up and down. There are bigger spikes and bigger peaks and valleys. I think we are in for some softening again because I don't think we've seen the worst of what's going to happen metropolitan-wise. We really haven't. We haven't seen. I mean, we've had JobKeeper creating some false bottom for the moment. I think a lot of people, unfortunately, are going to lose their jobs. I think a lot of businesses won't reopen. I think a lot of the banks are going to start to foreclose. People have got guarantees or debentures that they put their family homes up as security. So I think we're going to see some fairly challenging times in some suburbs. Not everywhere. Not everyone's going broke. People are making money. So I think we will definitely see some softening. What is the bottom? Remember one thing though, this was an economic downturn. It was a government-imposed downturn. Prior to COVID, the market was actually going really well. If you remember, it wasn't that long ago, late last year, even the beginning of this year, the markets were all going really, really well. So I think regional will continue to improve. There is such a lack of supply, Arthur. My biggest challenge is finding property in some of my areas. I've got to keep, I'm constantly ringing agents. So I look again, I wouldn't be encouraging you to consider regional if I wasn't prepared to do it myself. I will buy another property this year. My plan, very open. I'll buy 2 properties a year and I'll just keep buying, because it's just more and more people are starting to realize that I don't want to have a big mortgage. COVID has presented a lot of challenge, but a lot of reflection. And people, one of the workshops that I'm doing here for Suvid is called rent vesting. Is that the way of the future? A lot of people are starting, I rent. I had a beautiful home in Kew and I went through a divorce. And I had a beach house down the coast. I now live in Canterbury, I rent. And I buy regional properties because for me, I don't want the stress anymore. I had a huge mortgage at one point, huge. Most people go, yeah, but mate, I owe 500,000. Multiply that by 4. And that was a big mortgage at one point, but I had a big income at doing some different things when I had a very successful mortgage practice, but I got out of that. So I think you're going to see a lot of people do different things, and rent vesting is one of the topics coming up over the next few weeks that I'll be presenting for Suvid and his team. You're seeing a trend. People don't, and also after this, another thing to be mindful of. The current generation, like I've got 2 boys, 20 and 18. I can't see them wanting to live in the burbs like mum and dad did. I can't see them wanting to have a big mortgage. A lot of kids have got a big uni debt. Kids want everything yesterday, don't they? That's the way the world is now. They're not used to. When I grew up, you started on the bottom, and you just worked, and you understood you had to earn your opportunity. Kids now, they're impatient. Delayed gratification. They're used to playing games. You know, one of my sons, he loved gaming, Fortnite, and all these other silly games with his mates. They want to hit now. They're not used to saving. So they will rent where they want to live in the suburb that they want to hang out, and they will be able to buy property regionally because it's a smaller deposit. And their parents will support that because they're thinking, well, we can come up with 20 or 30 grand to help Johnny out. So regional, I believe, I honestly in my heart, and that's why I'm also loving what I do. I could be a metropolitan buyer's advocate, but I believe in this, and I know it's worked for my mates that I'm working closely who coach me for 20 years. He's got over. He's one of my buddies. I think it's podcast number 8. Gary Harvey. I interview him. And he talks about how to build a big property portfolio. This is a strategy. And here's the thing, Arthur, when you start to hang around this stuff, and if you listen to my podcast, it actually just makes sense. Like I'm not making stuff up. Everything I say has been researched. Everything you can find through RP data, or you go through Terry Ryder's website, Hotspotting, they're all facts. Where it's difficult for people is you're not hearing this sort of information in the mainstream media. Why? It doesn't create headlines. They want to create sensationalist. And Terry and I, we give them a good clip or whack in the podcast. Why? Because I think they've been very irresponsible. The things they say and do actually create emotional and mental health stress by saying things like the market's going to drop 30%. How is that helpful to people? A guy's just said, maybe you'd have to, like I was talking to, because I work with lots of brokers. I was talking to a broker today. He had to lay off 2 of his brokers. How's that going to make that guy feel? More stress. And then maybe he can't pay his mortgage because they got some guy, Journo, telling him his house is going to drop by 30%. So this information I'm sharing, I know sometimes may challenge you. And people will still go away thinking, well, what if I can't get a tenant? You know what? That's just a belief system that the system has programmed people to believe. Do you think I would go and buy property for clients in areas where they've got high unemployment or areas where I can't get a tenant? That would just make no sense. So that's why we call it the holy grail of property investing. Affordable properties, yields over 6%, demonstrated strong local economies with low vacancies. And really, it is common sense. It's just about, like I said earlier, research. And look, the thing that I would encourage you all to do is have a conversation offline with Suvit. Understand what your options are. I mean, he's the expert. He knows your personal situations. Find out what you can do. And then from there, if you decide this is for you and you want to learn more, once Suvit's gone through the numbers with you and worked out what your options are, I'm more than happy to talk to you all individually offline about where I may potentially be able to help you, because I've got different clients with different goals. Any other questions?
Hi, Phil. I'm Sudhir this side. By the way, amazing presentation. Thanks. It was very insightful.
Yep, it's an absolute pleasure. I love doing it.
Yeah, so by now, like I know you're a true advocate for investing in regional areas. So one of the questions with regards to that was initially when you showed us your package, you had mentioned that what your goal is, whether you just want to keep the property for your children or you want to sell it. And obviously with selling the property, you have that capital gains factor that you've got to take into account. Yep. So if we go by an option of selling the property in the next 10 years or 15 years, would you still encourage regional investing?
Oh, absolutely. Yeah, definitely. I think we're more likely, let's say you want to sell in 10. I think we're more likely to see capital growth, and we know the numbers. If I go back to that slide I said to you earlier tonight, that 61 regional centres in Victoria have had capital growth of more than at least 10% in the last 12 months. So if you wanted to sell your property in 10 years' time and you're seeing 10% and you're seeing continued capital growth, yet Melbourne was in most suburbs going down, would I still recommend regional? 100%.
Great. Thanks, sir.
You're welcome. No problem.
Hi, Philip. Rohit again.
Hello,
So
Rohit
in this package, like if we go ahead with the package, and you said that it needs to be 50% deposit upwards and then 50% after the settlement of property, and
Well,
in
sorry,
that,
after the settlement, it's when you signed a contract to buy.
okay. So in this process, is there any limitation on number of properties you will search for the client? Like if you search, if you show me like two properties, okay, and we might not agree on buying that property, then is it like a limit on the number of properties you can search for the client, or
I've never put a limit, Rohit, because we'll always find something that will work. So I might come back and I might even look at a dozen before I present anything to you. But we will find something that will work. But I've never put a limitation on it. I've never had to, because we've always been able to find something that worked.
Okay, great.
So
Thanks.
in other words, I might present 6 properties to you. I mean, I guess what I would come back and say, well, hang on, with the greatest of respect, who's the expert here? What are you paying me to do? Because if you're not going to take my advice, then I'd say there's no point in working with me. It'd be like me going to a specialist surgeon and saying, mate, I'm coming here to get advice for you. And you go, no, I'm not happy with that advice. I'm not accepting that. Well, what was the point in going to a specialist? Or why go to an expert like Suvid if you're not going to take his advice? It's not an arrogant statement. I just would question, what's the point in engaging someone if you're not going to, you've got 3 things. You've got to know me, like me, and hopefully trust me. If you don't, and really, if you don't feel you could trust me, then I'm not the right person. You'd be better to find someone else. So, because I've never had a situation yet where someone said, no, Phil, I'm not with you. I'm happy to have a robust debate, absolutely, but we need to come back to what's the goal here. If I'm ticking all the boxes, I would question, well, what would be the reason you wouldn't want to purchase that? I'm never going to pressure you to buy something. Of course not. I'm on your team. I'm working with you and for you. But I've never had a situation where I couldn't help someone.
Okay, that's great.
I hope that answers your question. I'm not.
Yeah, definitely. No, actually, this question came from one of my past experience.
Okay.
In 2017, I teamed up with a company called Positive Cash Flow. It was a similar name, and they were like acting as a buyer's advocate, and they showed me different properties.
Yes.
On all of them were in Queensland, nothing in Victoria, because as per their calculations and their statistics and numbers, Victoria was not the right place to invest at that time, and Queensland was expected to have lots of infrastructure spending from central government, and people were migrating from NSW to Queensland, so chances were increasing there. There was growth in property prices, what they were showing at the stats. And after showing like 4 or 5 properties, and when I did my own research, the properties, like they had like house and land packages. So land was on the same price, which everything was getting there. After checking some other properties on like real estate or domain, but their construction costs were way higher than what others were giving. So like I did not agree with them after 3 or 4 properties, and then they were like, okay, we can't work like this. If you are not agreeing with us, then we can't show you anything more. So that was not a very nice experience. So in that, I was doubting that they were getting, because they were showing properties only in a particular region. You would be aware about that Logan region in Queensland.
Robert, now I understand a lot better your situation. I wrote a book. I wrote an ebook, and I'm happy to get it to you. It's called "Before You Spend Your Dough, Here's What You Need to Know." Now, I can tell you, Rohit, I used to sell off the plan properties like those house and land packages. The thing about it, and I'm not being disrespectful to the company that you were working with or spoke to, did they charge a fee for service to do the work?
Yeah.
Okay. Plus, they would have been paid, I would have thought. Did they offer
Yes.
to rebate you any of the commission?
No, I doubted after 3 or 4 properties, I doubted that they were getting some commission from the builder or whoever was selling.
Okay, so I'm going to point out the difference. I'm not motivated to try and steer you in any direction. If you were to work with me, I'm not trying to get you to buy anywhere in particular. We have a formula. You and I would sit down and we'd talk about what your goal is. I buy Australia-wide, established houses. I used to sell and buy house and land. I've done a lot of business in Southeast Queensland. I know how that stuff works. And also, if you had to sell that, probably a good chance they would have been getting sales commission, more than likely, and the valuation would have come in under purchase price. So it's not a strategy I agree with. I understand the strategy because as I said, I used to sell house and land packages for 10 years. And so I've seen the good, the bad and the ugly. I'm working with you. So we are not trying to persuade you to buy anywhere in particular. You are very welcome to have input, of course, but everything that we would be doing would be based on research, not about, oh, we're going to buy in Queensland. We can buy in Queensland, but again, it's got to tick the boxes. So what you've told me makes a lot of sense. I think when someone says, oh, we can't work with you, wow. My attitude is, of course, we work together. We're a team and we'll find the right solution. If it takes me 12 months, and if that's what it takes, that's what it takes. Having said that, if you were rejecting things that we felt honestly did tick all the boxes and then there wasn't a logical reason for rejecting, then maybe we can't work together. And I'd be open about that. Would I refund your money after the first 6 months? No, because I've invested time. I'm running a business. So that would be your decision. But I certainly believe there's be no reason, as long as we're working on ethical fundamentals, which we are, that we wouldn't be able to find you a suitable property. It's no reason. It's just no reason because there's thousands of properties out there that will tick the boxes for you. You there, Rob?
That's great. Yeah, that's great. That gives more confidence.
Well, it's about being honest. I mean, we've nothing to hide. We're not trying to influence you to buy anywhere. We want you to buy on the basis of fundamentals that are going to work for you and your family. That's what we're motivated by. You're trusting us, so we treat it. We take that trust with great respect, my friend.
Okay, so one more question from this. Sorry
Yep.
to have a lot of questions.
all right.
When like we settle on some property, so you also help in leasing that property, or it
I'll
will
help
be?
If we're working on the concierge package, I will help you to find an appropriate agent,
Mm-hmm.
and I will work with that agent to help you get tenants. Yes, absolutely.
Okay, because being in regional, we might not, it might be like 200, 300 or 500 kilometers from our place. So, and we might not be able to visit there every now and then.
No, and you don't need to, and that's part of what we do. We're the ones that are on the ground. My team's on the ground. We're managing renovations on the ground, and that's part of what that package is all about. I respect and understand people aren't going there, and that's part of why I deal with people all over Australia as well, because they're engaging us to provide a solution. So, that's one of the things I love to be able to do. For me, COVID's been incredibly busy because people still want to keep buying, and I've been educating people about this system and this opportunity. And so that's why I went and made sure I got people who have got good qualifications to work with my team on the ground. When I say on the ground, in the regional centres.
Okay, great. Thank
You're
you.
welcome. No problem. It's my pleasure. Any other questions?
Are these fees tax deductible by any chance?
Sorry, what was that, Arthur?
Are buyer advocate fees for investment properties tax deductible? Suvid, I'll take that laugh as a no.
Not necessarily, no. It's a tax accountant's question. That's the first thing.
I'll ask my accountant. Yeah.
Yeah, that's right. I mean, some of the acquisition costs, such as a pest and building inspection, I would have thought would be tax deductible.
Yeah, that's a good way to put it. Acquisition. Oh, yeah.
Yeah. And the other costs, from my understanding, become part of your cost base when you go to sell.
Yeah, that's right. And then, and even looking at things like a depreciation schedule can make a lot of sense.
No, cool. Thanks.
You're welcome, Arthur. Cool, man. Any other questions?
I got one more. How
go
do you feel about the Ballarat? Kind of like the, I think Ballarat had some government work put there after.
Yeah, they've got a Gov, Arthur, they're building a Gov hub there.
Mm-hmm.
I really like Ballarat. I really do.
Yeah.
I was up there and then I went to Bendigo, probably about 2 months ago.
Yeah.
But again, for me, it doesn't tick my boxes because I think it's become too expensive for this formula. Now, if a client said to me, I absolutely want to buy in Ballarat, well, I'm not going to say, no, we're not going to do it. Of course not. I mean, I'm looking at a block of flats for one of my clients at the moment on a Torrens title, a single title, 4 flats. It'll give us a 6.7% yield for $575,000 for a block of 4 flats. Excuse me. So again, it's horses for courses, but my fundamentals are within this particular lane. But that's like, sometimes I'll look at a property, I get people who say to me, we want to buy something where we can subdivide and put 3 units. Can we do that? Yeah, of course. But this is my bread and butter, Arthur. Any other questions, friends?
My wife just had one, and just to confirm, Philip, do you have a minimum threshold of like capital growth percent that's part of your criteria?
Well, the way we answer that, Arthur, is we're looking at growing local economies. Now, what does that mean? Okay, if you go back to 2013 in Sydney had been going backwards for some time. Their market had been terrible. So what we look at are fundamentals. We're about understanding what is likely to drive an increase in prices. And a couple of those good clues, Arthur, are vacancy rates. So in other words, vacancy rates are shrinking, and rising rents. When rents are rising and vacancy rates are shrinking, they are usually a good clue that a market is about to increase in prices. So what Terry's company does is they track every single suburb across Australia. One of our key goals, and this is why I talk about the war on mainstream media, we want to be buying in economies before everyone else is there and the media is celebrating it. Like the media will say, oh, Ballarat, oh, you want to get into Ballarat? It's just gone up 12% in the last 12 months. Well, guess what? Everybody starts buying in Ballarat. The smart ones were already there 18 months before because they were following fundamentals. We're about tracking fundamentals. It's no different. I used to work in the 80s on the Australian Stock Exchange. I worked for a stockbroking firm back in the 80s on the trading floor. And it was all about reporting, research. That's what we do. We don't go and buy somewhere because everyone else is buying there. That's the herd mentality. My most recent podcast, episode 17 last week, we talked about the herd mentality, Arthur. Do the opposite. So by the time it hits the press, too late. You might be buying at the top of that particular cycle. So we look at what's going on in markets, what's driving a market to likely put upward pressure on prices. That's what we're about. So I pay for that research. I pay a lot of money. I invest a small fortune in research. But you know what? If that's what's going to give my clients an edge and me an edge for my personal investing, I'm happy to do it. Got to have a point of difference in the market. I chose to be a regional buyer's advocate. I don't buy anywhere other than regional Australia. I stay in my lane, mate.
Nice. Thanks, Phil.
You're most welcome. It's a pleasure. I love what I do. Any other questions?
I believe that's it, Phil.
That's it?
I think so.
Well, thanks everyone for being here suited. Thank you for your hospitality.
Thanks a lot, Phil.
Looking forward to next week. And I'm excited about next week because I've got some incredible data and stats to share with everyone. So if you haven't registered for next week, it's going to be a cracker. So we'll be giving you guys more juicy opportunities coming up. So I'll stop the recording now, mate.
Yep, no worries.
Great.